Welcome to the Freedom CEO podcast. It's about becoming the chief decision maker over your life in order to step into a life of freedom. From business, health, wealth, charity, and giving back to just doing life on your own terms. I am your host, Shay Impediata. I am an award-winning activist, change maker, and a multifaceted impact entrepreneur with over a decade of experience in business, philanthropy, and health and wellness. In this space, I'm going to be bringing you insights, not just from me, but from incredible thought leaders around the globe to help you start making decisions towards living a life of freedom so you can live a life you love. Are you ready, guys? Because we are going all in. Known as a top-ranked advisor in Canada, along with twice being recognized as one of Canada's leading wealth management executives, and with a 3-decade professional career, Arthur Salzer is a certified investment manager and chartered financial analyst. He is also the CEO of one of North America's leading family office experts. Arthur is frequently interviewed by leading media sources such as Bloomberg, Reuters, NBC, Financial Post, Globe and Mail, and Washington Times for market analysis and commentary, and is frequently a speaker at leading family office and investment conferences across North America and Europe. He has been awarded Portfolio Manager of the Year, Multi-Service Advisor of the Year, and is a 2-time winner of Advisor of the Year for alternative investments. Under Arthur's leadership, Northland Wealth has been recognized 8x as the best family office in Canada and the United States. So to say the least, he kind of knows what he's talking about when it comes to investments, money, fiat, all of the good stuff. And we're going to dive in right now on the Freedom CEO podcast. Joining me today on the Freedom CEO podcast is a dear friend who's also been a client of ours in business and also has an incredible wealth of knowledge himself in the financial markets, economic, all of the good stuff. And we're going to talk about this today. So Arthur Salzer, welcome to the Freedom CEO podcast.
Thank you so much, Shay. It's a real pleasure.
So, I'm really excited to chat with you today because I really believe we are in probably one of the most unique times that I'm going to say younger generation has come through and see. I grew up listening to my dad in the 80s, which, you would also recall, of interest rates going up to 18%, gold skyrocketing through the roof, creative ways to move things like real estate around. And so we're in this interesting time where most of us have never really been in a business or an economic circumstance like we're seeing things now. Silicon Valley, banks crashing, talking about the future of fiat currency. I feel like a lot of people are still figuring out today what fiat is, what that even means. And no, we're not talking about the car. We're talking about cash.
Actually, the car is a better value. You'll preserve your capital better with a fiat car than you would with fiat money.
I love that. Are you guys hearing that? Your car is going to preserve and hold its value better if you've got the fiat car versus the cash. So Arthur, let's just start with a little bit of your background, your journey, for those of you maybe who don't know you. Tell us.
Sure thing. It's funny that we're a few days into October, and I was just reminiscing on October 1st, because back in 1991, Canada was starting to go through a very similar kind of process. And it's when the chairman of the Bank of Canada, John Crow at the time, was increasing interest rates to try to quell inflation by increasing borrowing costs, aka interest. And the Economics Society of McMaster, where I went to school, we actually invited John Crow out to speak. Didn't advertise except for 2 hours in advance. We got 1,000 people to show up. And then we went out for dinner with John Crow. and drank some beers with them. So I got some unique insights. And it's funny that, 32 years later, we're starting through the same process. And one of my first jobs when I got out of university was talking to people that had borrowed money from a bank while I was working at TD. And we were saying, unfortunately, we're over leveraged to you. We've got not enough security, and your line of credit that you can't pay for right now, we need to term it out and make it principal and interest. And your costs are going to go from $1,000 a month to something like $1,400 or $1,500 a month. And for the next few years, banks really tightened in their reins, and it caused a significant cascade in the Canadian real estate market. So my background actually, it's funny. I got my real estate broker's license between high school and university back in 1988. Yeah. I think that's plus or minus the same year that your dad got his real estate broker's license. And in the subsequently, from my work era, I've also obtained the Chartered Financial Analyst designation. So 33 years now in the finance area, investing in things like real estate, private equity, public stocks, private credit, all sorts of things, and gold and even Bitcoin. We started investing for our families a few years ago. So a broad base of knowledge on where we place clients' capital around the world for them.
Totally. Well, I love it. And like I said, I'm so grateful to have you on, because there's so much going on in the world right now. And I still think a lot of people are really unsure and not aware that they might even need to be doing something. And so they just hear that there's chaos or that there's concern. And so I'm grateful to have you on. I want to ask you first, you mentioned in the 90s, and we talked about even like the 80s, what was going on. What's happening right now in our world? Is this just history repeating itself per se, or is something different happening from what you've analyzed in the historical trends, if you will?
There's a couple of things. Some things are similar, and some things are somewhat new. And what is similar is we're seeing a situation where we've had true inflation globally. And for the most part, the last 30 years, plus or minus, we've had global deflation, which means that the price increases year over year were lower than the year before. And what we've seen the last decade up until recently was inflation rates, in many cases, lower than 1% a year. So, almost flat. And even in places like Europe, you had deflation, disinflation, where they had negative interest rates. And that has never occurred in the history of the world. And what we've seen over the last few years, starting with the pandemic lockdowns, was governments and central banks flooded the world with liquidity, with money. Canada, for instance, borrowed something like $700 billion. We only owed $700 billion, but we've added an additional $700 billion, and that money's been put into the system. Where it went, there's not a lot of accounting for. Unfortunately, the government doesn't really want to provide answers around those monies. But what initially we saw was a spike in asset prices. People were trying to secure high quality assets, whether it's real estate, whether it was stocks, whether it was gold, whether it was Bitcoin in some cases. But that money flowed into financial assets and real assets. And what we've been seeing now, our central banks are trying to unwind that excess speculation, and they've increased interest rates really regardless of the country at the fastest rate that we've got in recorded history. So rates went from negative in some cases or sub 1% to rates that are now 5 and 6% in level over less than an 18-month period. So that is playing and having huge implications to any entity, whether it's corporate, whether it's personal or government, on their ability to borrow and cash flow those rising financing costs. From a
no, go ahead.
And what we're seeing really at the same time occurring is a big push to something that's more akin to neo-feudalism. And people really haven't studied the Middle Ages, but essentially you had ruling authorities who would share the decree of law to local landowners, and those landowners, the lords, would tell their serfs what is going on. The serfs didn't elect the lords. It was a very top-down approach. And what we're seeing more and more so through things like the IMF and the World Bank, as well as the World Economic Forum, the WEF, is a group of elite, non-elected people that are instructing or encouraging elected government officials, regardless of the country, to follow what they think they know best. And that makes it very difficult when you're a company or you're a person and you're trying to operate within what used to be the rule of law, and now the rule of law is not holding the same way. So it's providing additional challenges to families of wealth and to investors particularly.
And I mean, you use just even those two terms. Like maybe I'm listening and I go, well, I'm not necessarily wealthy or have a ton of wealth. I'm not an investor. So what does that do for just your average person?
It's like a little more challenging.
Yeah,
it's a little more challenging for the average person, because what it essentially means is that tax rates are likely to keep increasing regardless of who you elect. The financial situation, we've added a lot of leverage at the government level across countries, across townships, across provinces and states, and governments want to pay for that increasing debt, and they need additional cash flow to service their borrowing at these new higher rates. So that means you're seeing tax increases going across the board, and investors, regardless of the degree of wealth that they have, need to be much more after tax sensitive and look at where assets are located or what type of income those assets generate in order to not eliminate, but to reduce and minimize the effective tax loss. And that's a real challenge. So you need to be, looking at just not your overall allocation to the different asset classes, but where legally or how those asset classes should be held.
Okay. And, again, I'm going to kind of go one-on-one on you, but you're the guy, you're here. So you're the better person to explain this. I think of the people that might be listening and going, what the hell is an asset class? Can you just break that down quick?
Sure.
What are we talking about?
So really there's three types of asset classes per se. One is cash. So whether you're holding physical cash, whether it's a near cash where it's a deposit at a bank, could be a short-term deposit, could be a short-term loan to a government, but typically any type of debt where you've lent it to another party for a period of less than 12 months. Then you look at things like credit or fixed income, where you've lent money out at periods of longer than 12 months. And lastly, really is equity. And that could be things like stocks. It could be things like real estate. It could be things like commodities. but it's an asset that you hold, and you haven't, you're not lending money. You're actually holding ownership to the underlying asset, and that's equity. And depending on an individual's or an investor's view over the short, middle, and long term, they may hold or exaggerate the holdings, favor one type of asset class over another. So for instance, one of the risks of fixed income and credit is interest rates. And as I mentioned, interest rates have increased at the fastest rate in recorded history. So when interest rates go up, the value of money that you have lent out goes down. And you've seen things like 20-year government of US bonds. So those don't have a lot of default risks because the government of the US will just print the money to pay you. But with rates going from almost zero to north of 5%, long-term government bonds to the US government, one of the least risky things theoretically around the world, it's declined north of 50% in market price over the last 18 months. So, most investors haven't seen that the last 30 years. They forgot what risk was in credit markets. They always thought it was default risk, but they forgot about interest rate risk.
Right. And I think, even somebody like in more of a simplified way, like I might, if you don't have bonds, maybe you don't know what bonds are, and we're not going to get into the technicality of that today. But as interest rates go up and inflation's rising, when we're seeing, right, your purchasing power becomes less. And I think that's a simple way for people to also tangibly for themselves be able to understand it. Like I used to be able to go to the grocery store and with $6 buy a bushel of asparagus, and now that same asparagus is like $8 or $9, and so like you're going to need more money because the value of your dollar has gone down.
And next year it'll be 10 or 11 or $12, and the rate increase from 3 to 8 is $5. So if the price only goes up by $4 next year, the government will say that inflation is falling. Yet you and I know that what I used to buy for sub 4, now I'm paying $12. So prices are going to keep continuing to rise the better part of this decade.
Also too, I think it would be worth it. I'd love your perspective on this, and I don't know when, you might know, that the dictionary, literally the dictionary, once upon a time used to explain inflation as simply the government expanding the money supplies. Whereas today, like when you hear an average person talking about inflation, they just think it's the cost of goods going up. Meanwhile, that's not technically what is going on. And I think it's helpful for people to understand that the reason why inflation or what the cash you have is becoming less is because the government's actually printing more money and expanding that money supply. And because of that, they actually dilute the value of the dollar. And therefore, you're going to need more dollars. Like, do you want to go through that a bit?
Yeah, there's a nuance to that. So money is not created. Fiat money is not created until a bank lends a borrower $1. And so what we've had over the past, call it 15 years, since the great financial crisis, was central banks effectively, printed a lot of money, but the money didn't flow into the system. The rate of borrowing wasn't as high as in what we had seen in the periods previously. So monies were given to the banks to shore up their balance sheets, but the banks didn't lend that money out. And if the money doesn't get lent out, effectively the money supply, the working money supply doesn't go up. What we saw during the pandemic lockdowns was monies directly placed into the bank accounts of people and companies. And that money that was directed there by the central banks, people went out and used it. They bought assets. They speculated on stocks. They tried to buy condos and use the money for 3 or 4 or 5 different deposits at once. But when that money went into the system so quickly, that's a big part of the rise of inflation. And at the same time, the governments, they have put into the economy a lot of money. I think the 3 stimulus packages in the United States are something close to $7 trillion. The entire bailout of the US banking system was less than $1 trillion, right? So we're talking magnitudes the size of what we thought was too large 15 years ago. And everyone around the world is paying the price today. And it's going to take a significant amount of time before we don't see price increases across everything from groceries to fuel to rent and everything else. It's not going to be a slow process of recovery.
No. And I think the most important question that a lot of people are asking is, like, what do I do now to not only prepare, but like protect? Like, what does that even mean? Like, how to protect your cash or the assets you have, which, you broke down the separate or different asset classes. So part of your role and your area of expertise, of course, is you're advising and guiding families and individuals on what to do with their money in all different types of market climates, right? So for right now, where we're at, if I have, let's say, cash in the bank, but I don't own a house, right? I just have cash. Let's make it really simple. No stocks, no bonds. I'm not playing in that market. I just have cash.
Get a short-term 30-day GIC. The current, you can probably get a short-term GIC or money market instrument now close to 5%. And that relative to inflation, I think official rates are around 5. They're more likely 8 or 9 if you use some of the old school metrics. So you're going broke slowly, but not quickly. But what we're starting to see, and I'm not calling for an economic collapse or anything else, but there are times through market cycles when money does get tight. And we're seeing that tightness right now. So if you were looking to put money to work outside of lending it short term to a bank or to a government, you might get better opportunities 6 months from now or 7 months from now. Things might get a little bit cheaper. And in the meantime, losing money slowly right now is not a bad thing. But sooner or later, if you do want to stay ahead of inflation, you will have to put capital to work. Places that we see a lot of value is in the private debt markets. You can lend to fairly high quality companies now with assets at rates that are in the double-digit range. So that compensates for most of the inflation. Not so much after tax, but if you're a non-taxable entity like a foundation or a charity, those areas, they make a lot of sense from a return versus risk standpoint. We're seeing a lot of opportunities starting to develop in real estate. There are owners of properties where they are over leveraged, where they haven't managed their borrowings properly, and they may be in variable rate or shorter term mortgages, and those are either rising or coming due shortly, and they won't be able to finance them. So those those properties, that supply will be coming to market. We're starting to see it both in Canada and the US and Europe, but there's still probably some more time to go. We probably still got another 18 months to 2 years of opportunity ahead of us in that space. Companies are like public stocks, they're declining. You're starting to see the sell-offs happen. And it's really, the market's repricing in higher interest rates for a longer period of time. It's highly likely we'll see rate cuts next year in 2024, especially in the United States. Yeah. It is a presidential election year, and the central bank, the Federal Reserve, tends to be wants to be out of the way during an election year, and to try to make the incumbent president not look too incapable. So I think they'll be trying to help Biden win another election in the U.S. Over the next 12 months.
So I want to ask you this question, and if you don't want to answer it, then Shane, my producer, will delete it. He'll edit this part out anyways. Okay. But I think a lot of Canadians specifically are very apprehensive about having their cash in a bank right now, regardless of what their viewpoint is or has been on the pandemic, right? Like when we're just talking about the banking system, the Trudeau government did a very non-Canadian move last year, and still of freezing bank accounts. And there are still Canadians that their bank accounts are still frozen. And so I hear often, I have cash in the bank, like, what should I do with it? Which I'm always like, if you're saving money, it's costing you more than you think. You got to, like you were saying earlier, making that capital work for you, take it out of the bank. Have you experienced that, like within either, not necessarily like your clientele, maybe amongst your clientele?
We have. So my firm, Northland Wealth, is a fully regulated entity by the Ontario Securities Commission. And by fully regulated, we, along with any other regulated institution, it could be a bank, it could be a mutual fund company or another portfolio management firm, we all received an email prior to the Emergencies Act being enforced. And it was on a Thursday. The Emergencies Act wasn't presented to Parliament until Friday, and it was not passed by the Senate until Tuesday. And the letter was from our regulator on behalf of the Royal Canadian Mounted Police, the RCMP, acting on this, new act that was being passed. And everybody on the Thursday, before the act was even introduced to the House, and certainly almost a week before it was passed in the Senate, froze the bank accounts of almost 100 people, or investment accounts of people, their mortgages, their Visa cards, their lines of credit, everything got frozen because they were just following orders. And that shows you, and it illustrates that regulated institutions may or may not be the friend or ally to the client or the customer, depending on the relationship. And the government makes it very difficult for any regulated entity to not follow the rules that they push forth, even if it's not law. And that is something that's quite scary, or should be scary to the majority of Canadians, because it may not be you this time that has your accounts frozen. It's somebody else.
Right. But
that's how dystopian societies begin. It's always somebody else, and then it gets closer and closer and closer. And I've done business in places like Cuba. I've done business in places like China. I've seen how they operate, and people are afraid, and your neighbor who you thought you were on friendly terms with can turn into your enemy very quickly. They're more than willing to give you up to government entities, in order to gain favoritism, or possibly not have not have the consequences come to them and their family. So that's not the Canada that I grew up in. It's not the Canada that I knew, or a lot of people have known. But I think it's one that is here today, unfortunately.
So, in light of that, a lot of people, and I talk often on my own platforms around an insurance policy. Not quite literally going to like Sun Life and pulling out an insurance policy. That's a whole other conversation, investment strategy, tax benefits, not going there today. But I mean a tangible insurance policy that in the event that you can't access your cash literally becomes worth zero overnight. That could happen. Nobody has a crystal ball. It's certainly not going up. We look at the trends going down. And gold and crypto, of course, are two words that continue to come up. And I've heard, I'm sure you do too, Robert Kiyosaki. I listen to him often. And he's like probably the king of going, God's money is gold, government's money is fiat, people's money is crypto. And so I'd love your take on, in light of everything you just said, as an insurance for the fiat cash that we have, is gold a good area to be? And I say buying gold, not investing in gold.
Like having coins, having jewelry, for the last, 5,000 years plus, really has been a form of money and a form of wealth. Right. Different societies have used, different things over the course of time. We used to trade wampum, here in North America, glass beads in Africa. Yeah. But gold was the thing that mankind couldn't replicate. They could find more, but because it was difficult to find it, you couldn't flood the market with gold. Right. And it was a great use. And really up until 2009, it probably was the go-to to have some form of asset that's defends against inflation over time, and it allows you to purchase goods or services. And the introduction of the Bitcoin white paper on Halloween back in 2008, that really has changed the world, because you've got something akin to a digital gold that anybody can, for the most part, buy it, exchange it, interact with it, can do so without government censorship. And it's the first asset in the history of the world that cannot be seized by a government entity. Gold can still be seized. Governments can't hack the Bitcoin blockchain. So for investors that understand, the difference between things like hot wallets and cold wallets, and understand, how to properly manage their 24 seed words, it becomes the hardest money, even harder than gold, after the halving in spring 2024. So the new supply coming on is lower than the new supply of gold going forward, and it's going to continue to get lower. And you can move it anywhere around the world. So gold has been a very good asset. I'm not saying not have some, but Bitcoin itself, not crypto. Crypto, everything outside of Bitcoin is a tokenized, digitized company. And unfortunately, those coins can be changed, like your Air Canada miles. So there's not a lot of discussion when Air Canada changes their mileage plan.
No.
Bitcoin's a little different. So it's one to definitely learn about. And I'm not saying go out and, put your life savings into it or invest in it, but there's a lot of good information. One of the good books out there, it's called the Fiat Standard. And a friend of mine had written the book, Dr. Saifuddin Ammous. He lives in Lebanon now,
Okay.
but his wife's family actually live in Windsor, Ontario. But it goes through the entire history of money. And to understand money better, you start to very quickly see the drawbacks to it. And it's great that Bitcoin's around, but things like real estate over time, have been good investments. They take work. You actually have to find the property, maintain the property. If you're using it for rental purposes, you need to be able to operate it and to allow high quality people to rent from you and ensure the rent's collected. But it can be a very, very good business, and it is something to definitely look at. But again, why it's being utilized is because the new supply of real estate is not coming to market as fast as the new supply of money.
Right.
And that's what makes real estate worth something, is that lower stock to flow, that the new supply, relative to what's existing isn't a really large number. And as I mentioned at the beginning, the Canadian government basically doubled their federal debt in an 18-month period. You're not going to double the supply of Canadian real estate in an 18-month period. It's impossible.
No.
Right? They can't even build, 10,000 homes at once.
Totally. Well, especially with the current government that doesn't really support doing that anyways. So, is also part of the challenge. Okay. So Arthur, let me ask you then, right? What I'm hearing from you, what I'm understanding is take some cash, not necessarily all of it, but take some cash, have some money specifically in Bitcoin, not other cryptocurrencies. And then buying things like gold, also a good idea to have on hand. And it's that diversification of portfolio, which I'm always for that, right? Whenever something is performing well, it's probably not everything's performing well in your portfolio. And that's really why you want to have this diversity within. We know that in August.
But being a good investor, it's constant regret. You regret that you don't own more of the high performing investment that you have. And you always regret you've got too much of the underperforming investment. It's good investing. You're never happy.
Well, that's true. Good to also share that with people. So let me ask you your thought on this, because the BRICS nations met in August of this year, basically to say, F you to the US dollar from a trading standpoint, not using you anymore. We're going to come up with our own trading currency. The conversation around backing this trading currency by gold. And you're seeing countries like China, Russia, South Africa, buying heaps of gold, like tons and tons of gold. What is your thought on the effect that could have to fiat currency if gold is brought back into at least this segment of trading globally? And for those who don't know, the US dollar used to be backed by gold. And in 1971, Nixon took cash off of the gold standard, backed by the gold standard. So what effect do you think that could have for, let's say, people who don't have any gold today and they're just holding their Canadian dollars or their American dollars as they currently understand it?
There's actually even a larger problem. And I wrote an article in the Financial Post magazine where I've got my own column called Curve Appeal. Since 2016, Amazing. I've been writing it. And back in October 2019, we were sending a relatively large wire through the European banking system for a capital call that one of the private equity investments that we'd made for a family, a trust actually. And the bank held the wire. And the bank said, well, we need to know who the underlying beneficial owners of the trust are. And, my firm's full facta regulated and in the US. And we said, here are the beneficial owners. Please move the wire along. And the wire didn't move. And I kept teasing them, if we use Bitcoin, we could have done the transaction in about 10 minutes. The French bank held the wire for 30 days, 30, wow. An entire month. And what was going on is the repo market, the bank repo market backed up the day before, and the bank believed that they needed the cash on their balance sheet more than our client or the private equity firm needed the cash on their balance sheet. So they stole it basically for 30 days. And this highlights the problem of the US Fed wire system, where these banks control your money. And the challenge is, places like Russia, China, Brazil, the BRICS, they don't want to have to use FedWire. They want to have their own system. But regardless of what they use to back the currency, and maybe they could have a better fiat currency system in China versus the US, the fact still remains that it's fiat, it's by decree. And when you look at social credit scores and the way that they're utilized for citizens of China to spend and utilize their own money, if you don't live the way the Chinese government tells you to live, then they freeze your account and they just do it right on your phone, much faster and much more efficient than the government agents here in Canada. So you're going to systems that are similar in nature. They're just at different parts. So I'm not, even if they try to have a better back system, have a little more gold than what they've had the last 30 years, I don't know if that's the end solution. What I do think will happen is the best currencies in the world will be backed by energy. And the energy that went into mining gold, that's really why it's worth something. It takes a lot of effort to do it. And I think in the future, the major currencies at some point will be backed by Bitcoin as opposed to gold even, just because it's neutral, that no government can control it. It's easier to move around and it's much easier to verify. Any home computer that downloads the Bitcoin blockchain can verify any token to any wallet. When you move gold around, it's done in ingots and takes a while to move from one country to another. And what the countries do is they melt down all the gold and they determine its purity. Right. And if it doesn't meet that level, then they decline the trade and they send it back. And that recently happened between Australia and China, that the quality wasn't high enough for the gold that was sent. So I think the world's gone digital to a large extent, and the solution over time will be digital backing of currencies. You'll still have, it's still possible to have gold there, but it may not be what we saw prior to the 1970s.
So fascinating. I feel like you need to come back on and just do part 2 going in that direction, because that That's a massive piece that I think a lot of people are overlooking right now. I think you're the first person I've actually heard saying that the future of trading, whatever that's going to look like, could be backed by energy, which makes sense in a lot of ways. Like
Henry Ford came up with that. That was Henry Ford's idea, that currency would be backed by energy at some point in the future. So that idea is over 100 years old.
Okay, well, obviously, thanks for pointing out to everybody how smart I am, or not.
No, it means I've never heard that before. Henry Ford is, right? I mean, because people haven't thought about that, right? So for him to come up with that over 100 years ago, he couldn't do it, right? It couldn't happen. And I think Tesla as well, made a comment about that. So there were thoughts about it. You just couldn't move it around. So there's there is a big change going on, but the problem is that the technology from the Bitcoin blockchain, if it's utilized privately through government, where it's centralized control, can be a very, very dangerous instrument. And things like central bank digital currencies, it will allow authorities to see every single transaction that you do. And again, people say there's nothing to hide, but then why do they need to know in the first place? So it's, the risk is increasing to individual sovereignty. And it's one of the biggest risks, I think, for families and, really humanity going forward the next couple of generations.
Do you have any advice to people on how do you stop that, or how do you fight it? I've heard some people saying, just start using more cash. Like, I think the UK has seen an increase of cash use higher than they ever have in like the last 10 years. Do you have any thoughts towards that? Like how we could...
Physical cash is going to be made illegal, most likely, at some point in time. There's already stores now. They say we don't accept cash. We don't, we're not taking legal tender. It's a trend, and it's not all at once, but it's similar to a frog in a boiling pot where the water's getting warmer and warmer. And by the time they figure it out it's too hot, their muscles don't have the strength to jump. And I think that's what's occurring in the world today. So, cash is nice, but I do think having, multiple residencies, being a global citizen, can hedge some of the risk that's going on. And when you look at successful families like the Rothschilds, I mean, they've held wealth now for, a few hundred years and have gone through the trials and tribulations of, things like the French Revolution, World War I, the Holocaust. And because of good diversification globally, they had enough capital to continue on with the next generation of family. There was lots of losses on the way, but not enough that it was catastrophic. And, when you think about diversification, having all your assets in one country is probably not a good way to go. I think it's a risk that's much higher than people really understand today.
Yeah, I agree. Arthur, like, seriously, can you promise everybody you'll come back soon? Because
Absolutely.
I know, like, I'd be mindful of your time today, and I'm really grateful for you coming on. So you will be back. I'm going to link up in the show notes, wherever you're tuning in from, Arthur's, even your article, like, send me that link. We're going to put that in the show notes, and you can connect with Arthur and his company and see what they are up to and doing amazing things. So thank you for being here today. Really appreciate it. And I'll be back soon.
Thanks so much, Shay. Take care.
Thanks for tuning into the Freedom CEO podcast. If you got value out of today's show, I would love for you to leave a review, as it will help my show reach other people as well. You know what to do. Download this episode, click the like and subscribe button. If you feel like spreading more love, hop over to Instagram and share today's show in your stories. remember to tag Shane Vidiata and the Freedom CEO. My DMs are always open, so drop me a line. I'd love to connect. Until next time, keep owning your decisions to live a life of freedom. Live a life you love.